Hello traders, welcome back to this channel. Now if you are new here, you are highly welcome. This channel is all about giving you simple, clean and profitable trading skills, especially if you are a beginner who is looking for clarity in the market but not confusion. Of course, there are so many informations out there on the internet, but then how do you spot out the right information to help you grow your trading skills? Stick with me here, and I'm going to guide you the very best way I can to make you a profitable trader. Now, in our previous video, we talked about support and resistance and how markets react to certain price levels and why price even reacts to those levels and how you as a trader can capitalize on this market moves. Now you stick with me to the end of this video and I'm going to show you everything that you need in knowing chart patterns. Today we are taking you a step further and we are going to talk about chart patterns and reversal chart patterns and how the market gives us visual clues as to whether price is going to continue in a certain direction or it's going to reverse. Now this chart patterns helps us to answer three important questions. Firstly, is the market going to continue? Is the market going to reverse? And where you as a trader can also place your trade. And where is the best place as a trader to place your trade or capitalize on this move. And where you should also exit from the market. In this video, I will show you what each pattern looks like, what it means, and how traders use it in a real market situations. Don't rush this part. Chart patterns work so best when they are combined with support and resistance levels. You make sure you don't trade these chart patterns blindly because there are rules to it and you must make sure you follow these simple rules and then make the best out of it. Now stick with me as I break them step by step to you, giving you real market examples for you to understand them perfectly. Let's get in.
Welcome to my screen. So quickly we are going to look at the chart patterns and then we continue in the main chart to see some examples of the chart patterns. So we are going to begin with the reversal chart patterns. We have reversal chart patterns, and then we have chart patterns or continuation. So let's first look at the chart patterns. So the reversal chart pattern, we are going to look at double top, double bottom, triple top, and triple bottom. So the first one, double top, looks like this. You initially have your resistance somewhere around here. We only trade these patterns at resistance and support areas. Okay, so price will first move to a resistance area and then begin to drop. So as it's dropping, you may have already taken your trade somewhere around this level. So price will drop a little bit and then move back again to the resistance level, and you have another opportunity to sell. So when you sell, then you put your stop loss right above the zone. Okay, make sure you always put a stop loss to your trade. So price will now reverse and then come down. When it forms like this, it gives you an M pattern. So an M pattern like this, you see we have this particular level here where price made a turnabout, and that level is called neckline. So when price breaks the neckline, don't say price has gotten to resistance, so the trend has changed. The trend can just continue to go to the upside. Okay, but for you to get a confirmation, you need to wait for price to break the neckline. Not just because price has broken the neckline, so price has started dropping, so it's a confirmation that price will keep selling. Price can come here and then continue the bullish move to the upside. So what you have to do is that you have to wait for price to break the neckline like this, and then you wait again for price to retest the neckline. So now this is an area of support that was broken. This is a support area that has been broken, and you know what we do at support levels. We buy from support level. So when price breaks support level and go back again at that level, then it means support has now become a resistance. So we are going to sell. So in selling from that direction, in selling from this direction, you have to put your stop loss right here. So you have to sell here. And that is where you have to look out for your candlestick confirmations like bearish harami, bearish engulfing, pin bar, bearish tweezers, evening star, and then among others. So that is where you have to look for those confirmations. And this particular point confirms that the market is actually changing direction or has changed direction. That is very simple to get it. And this is a rule to it. Okay, it's a rule. We are trading with rules, so make sure you stick to whatever is being taught. Make sure price retest the neckline before you go. And sometimes price may not always give you for the head. Okay, you see we have two heads here, like M pattern. Sometimes the M may not look so nice for you to spot it so simply. This is how it may look. One head will be bigger than the other, but your main concentration should be at the neckline. At the break of the neckline, you wait for price to retest the neckline again, and then you sell. So that is that for the M pattern or double top pattern. So now let's look at the reversal of it. That is the W pattern or double bottom. So the same thing, price will be coming from the upside and touch the support. As it touches the support, you buy from this region and then you put your stop loss below. So price will first initially push to the upside and then come down again. Sometimes, like I said, it may not come directly into the zone, okay? It may just come somewhere around here and then go to the upside. Now, if it comes inside the zone again, now you have another support, like a confirmation, two touches on the support line, so you can buy again, thereby putting your stop loss right below it. Now you should be able to spot your neckline where price made a turnabout before it came to mitigate the second touch. So this is the neckline, and then like I said earlier, don't say because price has come to touch the support so quickly the trend has changed from bearish to bullish, so you are stacking in more positions. Now you have to wait for price to break above the neckline and then retest the neckline. A retest means that whenever price breaks any level, price will have to come there again before it moves to the initial direction. So price will have to come here again before it moves to the upside. Reason being that this area is a resistance. This area here is a resistance. So when price was heading towards this place, we are expecting that price will sell to the downside. We are expecting that, or it is expected that price will sell to the downside. But if it doesn't and it breaks above the zone, if it breaks above the zone, then we are expecting that price will come back again to the support level which has been broken, now turning to become a resistance, and then now has become a support level. Previously it was a resistance. What do we do at support level? We buy. So you find your candlestick confirmation here and you buy to the upside. As simple as that. Now let's look at the triple bottom. It's just the same thing, okay? So with a triple bottom, price will not break the resistance, okay? It will come back again into the support area before finally it breaks. So once it breaks, the same thing, you wait for price to retest the neckline and then you buy. So as you buy, you put your stop loss right below your entry, and that's just opposite of the The same thing applies to that of the triple top. This is a triple top. So that is that. Now let's delete and look at the next pattern. Now the next one we are going to look at is head and shoulder pattern. Head and shoulder pattern. So the head and shoulder pattern also looks like that of the M pattern, but then a little bit different. So price will first in an uptrend first form a high and then tap inside a shoulder. And as prices come, you know this is our previous support level, okay? This is our recent support level. So price will touch inside the support level. Let me readjust this. As price has tapped inside the support level right here, it's now moved to the upside. And then as it is moving to the upside, anything it finds on the left side, it's going to respect to it. Because there is a resistance, okay? This is a resistance level. So price will test to it and then begins to drop. Okay. So this is now our shoulder. This is our left shoulder, and then this is our right shoulder. Let me write it beside it. Left shoulder, and then we have right shoulder. You may have entered a trade right from the head. This is the head, and this is the left shoulder, and this is the right shoulder. So over here you have two entry points. So you have the head and then the shoulder. And then the same scenario goes again. Wait for price to break the neckline. If price breaks the neckline, then you can wait for a retest to the neckline, and then you can sell again, giving you three entries: the head, the shoulder, and then the neckline, giving you three entries. Now this thing too can happen. The neckline may not always be in line. Okay, sometimes it may be slanted a bit like this. So when it's slanted, where do you mark as your neckline? Always mark the first one. Okay. So you mark this particular one, and then you wait for price to retest it. You wait for price to retest this neckline, and then it drops. So that's that for the head and shoulder pattern. And the same thing applies to that of the inverse head and shoulder happening at the support level. Quickly, let's look at that of the inverse head and shoulder. So price will be coming from the upside and tap inside the support level. So over here, okay, you buy your trade. Once you get a candlestick confirmation, you buy and put your stop loss right below it. So after you have bought, price will rally to the upside and it will find this resistance over here. So as it finds this resistance, it will begin to sell. And then as it meets this left shoulder, it will begin to also rise from there. Great. So the same scenario, price will come back again to the neckline. Then you look for opportunities inside the neckline, and then you buy to the upside, and that is that. So for the neckline again, sometimes it may be slanted like this. It may not always be on the same level for you. Okay, you should just mark the first one closer to price. That is this one, or sometimes this one may be something like this, very short, and then you have this. So you can mark this one, right? Yeah, so that is that for the inverse head and shoulder. Now let's look at chart patterns. What we looked at was reversal chart patterns. Now let's look at the actual chart patterns. So the first one we are looking at is the rising wedge. And with the rising wedge, you have one side bigger than the other, something like this. It is a rising wedge, and price with trading in it like this: touch the resistance, you sell; touch support, you buy; touch resistance, you sell; touch support, you buy to the upside. So there are a number of touches you should be looking at before you look out for a breakout from this level. Now, one thing you should know is that anything rising, the future of it is that it's going to sell. We have rising wedge, rising channel, anything rising, the future of it is that price is going to break to the downside and sell. So over here, we are expecting price to break to the downside. So as price has broken to the downside, if you look very well inside this channel or this wedge, you can see the formation of an M pattern in there, a slanted one, M pattern. This is more of an M pattern. But then what did we look at, or what did we talk about? We talked about the main confirmation, which is price retesting the neckline. So this is the neckline. This happens to be the neckline, or the last low. If you are trading the wedge, you are looking at the last low in the market. So we have the high, a higher low, higher high, higher low. This is the last low in the market. So we retest the last low in the market and then we sell. So price retest this particular level and then we sell. When you are selling from this level, make sure you put your stop loss right above the zone. This is to protect your trade so that you don't lose more if in case price goes to the upside. Now let me teach you quickly two types of retest. The first type of retest is that price will retest the low. The second type of retest is price will retest the trend line. Anytime price breaks above the trend line, it will retest the trend line if the need be. So price can retest this level and will not go and retest the neckline. So when you are picking a trade from here, you have to put a stop loss to it because price may go above it and touch the trend line instead. So get to know the difference. Two types of trend line, two types of so get to know the difference. There are two types of retest. The first one is retesting the previous low. The second one is retesting the trend line. Good. So now let's look at that of the falling channel. The same thing also apply. The same scenario. So the falling channel to the falling wedge, the same thing. Price will be trading inside a wedge like this. As it touches the support to buy, resistance to sell. And if you're not able to do this, you can only wait for price to break above the wedge and then you look for opportunity to buy. So price has broken above the wedge. What do you see here? You can see in E here, a W pattern, double bottom here. This is a double bottom. And where is the neckline? This is the neckline, which is the last highs in the market. So price will have to retest these highs and then you buy to the upside. The second type of retest is that price can come all the way down to retest the trend line and then you have to buy from the trend line. As price touches the trend line, you look for opportunities and then you buy. When I see opportunities, I'm looking for candlestick confirmations. Right here, you should be looking for bullish harami, bullish traces, bullish golfing, among others. Okay, yeah, so that is that for the wedge. The wedge, one side is bigger than the other. Now let's quickly look at that of the channel. So with the channel, we have a rising channel and then we have a falling channel. So with the channel, so you have price trading in it like this. Sometimes you may not be able to trade inside them like that. So all you need to do is to wait for price to break below. I told you anything rising, price is going to break below. So you have to take notice of it. So price will either retest the neckline and then you sell, or price will go and retest the trend line. Okay, so price can go above, retest the trend line before it sells. So the same thing applies to that of the falling channel. The same thing. Okay. So price will be trading in it, touch the support to buy, resistance to sell, like that. Then as price breaks above it, you locate the last highs, which is your neckline here, and then you look for opportunity to buy or a confirmation to buy. Like I said earlier, price can come low, touch, to retest the trend line before it goes to the upside. So now you know the two types of retest. As we continue, I'll make a full video on retest. There are about 5 types of retest, so you'll get to know all the types of retest. Now let's look at triangle. Let's look at triangles. They are also part of the chart patterns. So with triangle, we have 3 types of triangle. The first one, we have ascending triangle, ascending triangle, descending triangle, and symmetrical triangle. So this one is very dicey when comparing it with the previous ones we have done. So normally this is how a triangle looks like. Sometimes you can have both sides to be equal. Okay, with equal size sometimes. Okay, normally that's how a triangle should be like. This is a triangle, right? But then we still have different types of triangle, like I just mentioned. We have the ascending triangle. Let me draw the ascending triangle so that we look at it quickly. So with the ascending triangle, we have the resistance to be flat. There is the resistance, and then we have the support to be diagonal coming from the downside. Okay, this is ascending triangle. It moves to the upside. Okay, it trends to the upside that way. So you see price going to the upside like this. And then with ascending triangle, the future of it, don't forget that all the patterns we have looked at, I told you the future of them. With all the ascending, with all the rising channels, I told you that the future of them is that they are going to fall. Price will break below and go to the downside. And then all the falling channel, falling wedge, price will break above it and go to the upside. But in the case of triangle, it is different. Ascending triangle, price will break above it. Price will break to the upside. The ascending triangle, price will break to the upside instead of downside. So you see price breaking to the upside like this, retesting it, and then it will keep going. That is ascending triangle for you. So note the difference. This is not a wedge. The difference is that the ascending triangle, the resistance is very flat and then the support is diagonal. So let's look at the descending triangle. For that of the descending triangle, the support level is flat. You get the support level very flat like this. And then we have the resistance coming from the outside in a diagonal form. Now note the difference. And this is not a falling wedge. It may not always touch it. Okay, it can be something like this. Note the difference. This is not a falling wedge or a falling channel because this one is flat. A falling channel, it looks like this. But this one, since a triangle, it's flat. So price will be trading in it, goes to the upside. This one, price, the feature of this is that price is going to break to the downside. So price will break to the downside and then you will have to wait for price to retest the trend line or the last low and then continue to the downside. So we'll get to know the difference. This is descending triangle. Now let's look at the last pattern in triangle, that is symmetrical triangle. For that of symmetrical triangle, both sides are equal. Both sides are equal. Both sides are diagonal and then they meet at a point. It can be something like this or close. So this is a symmetrical triangle, but for that of a symmetrical triangle, the future of it is unknown. Nobody can tell the future of it unless price breaks above it or below it. So wherever price breaks, that is where that's the direction at which. So wherever price breaks, that's the direction at which price or the market will be heading to. So if price breaks to the downside, then it's going to retest and then continue to the downside more. But if it breaks to the upside, then it's going to retest and then keep going to the upside. So that is that for symmetrical triangle. So don't get yourself confused. Get to understand these patterns very well and have them at your fingertips. Now, let's go into the chart and then look at some examples. So this one, it's more of a double top like this. So you can mark a zone, cover it, and then where happens to be your neckline, this happens to be your neckline, this particular level. So you can also mark this level to be your neckline. And you can see price went to retest it and then drop to the downside. This is not so much of a good example. So let's dive in more. We'll get more examples and then we look at them. Now let's look at this pattern. Now in trading this, you have to be very sharp with your eyes. Okay, so I marked my resistance and then I marked my support. Now which pattern is this? This is a falling wedge. What is the future of a falling wedge? The future of it is that price will break to the upside. Now what do we see? Price broke above it and quickly it came to retest that same trend line before going to the upside. So this is one type of trend line. Great. So what I'm doing currently is what we call back testing, scrolling back the chart to identify your strategy or whatever you have been taught. It's what we call back testing. So this is a resistance. This is a triple top. A price broke above them. So there's a resistance. Price broke above them. See what price did. It came to retest that same level which was broken and it went to the upside. So you have to take good notice of all this. If you are doing the back testing and you are not getting more, you can change the time frame or you can change the pair. So this is a channel. Price broke below it. Don't forget that I told you that anything rising, price will have to break below it. Now, where is the retest? Now, you have to measure to see or count to see where the higher highs and then the higher lows are. Okay. Okay, so you can see we have a higher high, a higher low, a higher high, a higher low. This is the last higher low in the market before price broke down. So you mark this low. And you can see price went to retest after breaking down, price went to retest it and then it sold. So you could have made some money out of this move. Now let's look at this one too. This one also looks like an M pattern also. So where is the neckline? You have to mark the neckline. And you see that after price broke below, it went to retest it and then it sold. Now you can see that we are identifying almost all the parties. We are seeing all of them. We are seeing the head, the double top, the channels, and then among others. So you have to go and do same thing. Let me change the time frame. You have to go back to the chart and then look out for some of these things and then you take a screenshot and then you send them to me. Now in taking a screenshot, let me show you how it is done. Let's say this is what you have. I want to send it to me to check if it is correct. Make sure you place it in the center, zoom it up, let it be visible. Let it be in the center of your screen, whether you are using a phone or a laptop. Now go to the right side of your screen. You see some camera icon there. Take a snapshot. Click on it. This pop-up menu will come and then tap on copy image. When you tap on copy image, it has been copied. Open the WhatsApp group or my DM and then paste it and send it. I'll see it and then review it. But make sure you find as many as you can. Identify all the chart patterns we have looked at. Identify all of them and then send them to for me to look at them. So there are more. Okay, so let's go through, let's find few other ones so that we end the session. So there's another falling channel. Okay. At this time around, price came to retest the last low. Sorry, the last highs. This is the last high. Okay. Price came to retest on it, and then it went to the upside. This is a minor inverse head and shoulder. Look at it carefully here. This is a shoulder, a left shoulder, and then a right shoulder, and this is the head. And price, this is the neckline. The price broke above it with this candlestick, and then this candlestick came to retest it, and then it went to the upside. Right? You have to be very, very smart and sharp with your eyes, plus the use of your trend line to mark out all these things. So you can use as many pairs as you want. You can change different pairs, you can use different pairs. So we have this right here, but then there is no retest to it yet. We have our support level. Price has not retested it yet. So anytime price comes to this level in the future, price will retest this trend line and then go to the upside. So let's look at this one too as well. So we have this rising channel. And where is the last low? This is the last low in the market. This is the last low before price got this high. So we mark this last low, and you can see price went to retest it and then it dropped so hard. Yes. So that is that. So I'll leave you here and then you do the assignments. The more you practice, the more you get to understand. So make sure you practice and then send me your assignments in my DM or in our WhatsApp platform. See you in the next class.